Everybody having a good weekend. There we go. I think I fixed my mic issue there on social. Make sure that is up and going. I think that looks good. Let me just share the link real quick to my Twitter. Get that going. All right, in the meantime, if y'all have any ticker requests at all, feel free to post them, and we will definitely get into them. Yeah, all right. There we go. Send now. All right, we should be good to go. Good evening. I apologize for the little bit of delay. What's up, Zonk? How you doing, buddy? Thank you for coming in, hanging out with me tonight. I know if you're on the East Coast, it is 9 o'clock, so it is a little bit on the later side. But yeah, I hope everyone's doing good. Hope everyone had a good weekend. I know we sure did. We actually we went golfing. When I mean we went golfing, we attempted to play golf. Yeah, I haven't played in like 20 years, so it's been a while. But yeah, it was fun. It was a lot of fun, regardless. Got to go out. We only got to play 4 holes though, because it started to storm like crazy, so we had to get kicked out because of the wet weather. So that's unfortunate, but that's all right. I'm gonna try to go up to the shooting range sometime this week. But yeah. Other than that, it was pretty good. Nothing too crazy here. Let's see, just the normal weekend stuff, you know, just kind of tending to the house and having a little bit of fun there with golf. But all right, let's kind of jump into everything. I think everybody on the social media can hear me. If you can't hear me, just let me know. Watching from Arkansas, what's going on, buddy? Yeah, Georgia here. It is hot. This heat wave can go away. So can all these storms too. It seems like every day we've been having some weather. So I wish that would kind of go away. That and the heat. I mean, the heat is just brutal. But I mean, if you if you live in the South, you just kind of know how it is. It's just the heat, and it's brutal hot, and John knows too. I mean, every time we get a storm, I swear he loses power. I'm surprised we haven't lost power in these past few storms. They flickered yesterday. Strangely, we had a line that randomly came through, but it kind of flickered on us the other day once we got back home from golfing. But yeah, that is definitely annoying, just losing power and dealing with all that. So yeah, if all that can ease up, that'd be great. All right, looking at futures here. Yeah, we're kind of flat right now. Nothing too crazy. As you can see, last week, just to kind of review here, one of the key points from last week is we had the 10-year yields go back above 4%, and they still remain over 4% as we speak, and that we'll take a look at that chart too once we get to it. Another key point, the NASDAQ closed below the 50-day moving average. That is definitely a big talking point this week. Looking at the economic data, we did get all the inflationary data. We got the CPI, we got the PPI. CPI, core CPI, that is, actually rose slightly. We were kind of expecting a rise there, but we still need to get that core CPI down. The Fed wants to see the core CPI and the core PPI really to move lower in order for them to start to lower rates. We know that inflation is persistent and it's not, going anywhere. And we know that the rising energy costs is definitely not helping in that aspect. And if you haven't noticed, when you go to the gas pump, gas is a little bit expensive right now. I think when I went to the gas station, it was like $3.60 or $3.40, something like that. So it's definitely a little bit higher than it has been. So we'll take a look at that. Energy is definitely a hot item at the moment, especially if you look at some of the charts, and rightfully so. They've had some really good blowout earnings too, and some of those charts look absolutely insane. Also, weekly unemployment rose. This is not necessarily a bad thing. This is actually technically a little bit of a good thing to notice. I know it's kind of bad. It's kind of a double-edged sword. You don't want people losing their jobs and, being put in a position they don't want to be in. But for the Fed, it is one of those things where they do want to see a rise in unemployment to help fight inflation. That is one of the key components that they are definitely watching. They need to see unemployment go up in order to battle inflation and all the spendings that people are making. So, the economy is definitely resilient. We see that. We see that in all the data that's coming out, but also the CPI, the inflation numbers, they're just not going anywhere. Now, we don't have a whole lot in regards to the economic data front this week, especially tomorrow. Tomorrow's a quiet day as far as the economic data. We don't really have anything going on. There's a few earnings this week that we can pay attention to for sure. A lot of it's retail oriented. We got retail sales data on Tuesday. You got earnings from Home Depot, Suncor. Let's see. On Wednesday, we got building permits. But Wednesday, the big ticket item there is going to be the FOMC minutes. This will be the minutes in regards to the prior meeting that we had. Of course, we don't have another FOMC meeting until September. We do have Jackson Hole, not this week, but the next week. Last time we had Jackson Hole, Powell kind of laid down the hammer. We'll see what happens again this go around, of course. We also have crude oil inventories. Not much of a market mover, but we definitely want to pay attention to those building permits, housing starts, and those FOMC minutes for sure. We also got earnings from Cisco, Amcor, Wolfspeed there is on the post-market earnings. And then Thursday, we get our weekly jobless claims. We'll definitely want to pay attention to that, see if it upticks again. And then we also have earnings from Walmart. Walmart will be a good one because if you haven't noticed, Walmart's chart is at lifetime highs. So we could possibly, if they post some really good, strong earnings on their report and investors like it, then we could see a nice little breakaway gap off of Walmart. So we definitely want to pay attention to that. Obviously, if it goes the wrong direction, then, no worries. But Walmart, that's going to be an interesting one to look at on Thursday during the pre-market session. And then, of course, Friday, it's a little bit quiet. We get EU CPI, the Eurozone CPI data. That'll be a pretty interesting reading. And then we get earnings from a big name there from John Deere. So we definitely want to pay attention to that one also. So we got a little bit of an interesting week ahead of us. The only Fed speaker that we have coming up this week that's on the docket is Kashkari. Usually the market is just kind of like whatever whenever Kashkari speaks, so we'll just kind of have to see what they have to say this go around. But other than that, as far as the trading calendar goes, nothing too crazy. Definitely want to pay attention to the retail sales data, the housing data, and the FOMC minutes, and of course the jobless claims data. And then of course you got those nice little earnings from Home Depot and Walmart that I'll be paying attention to most closely. All right, so coming back here to the ES, this is your S&P futures. You can see that we've had this nice little downtrend. We've been cooling off what we talked about a lot last week. I know we didn't go live last week, so if you are watching on YouTube, we weren't live last week because we had an event on Twitter with Chris, so we wanted to give that our full attention. So this week, last week it was all about the negative divergences that we took notice of on the S&Ps, and since then we've just been kind of dwindling. Now, the key thing here with the S&Ps is that we're still trading above the daily 50, and when we're looking at our levels here on the S&Ps, I got 3 levels here to kind of, well, really 4. Really, the first one's going to be the dynamic 50 simple moving average. We don't want to see a close below the daily 50 simple moving average. You can kind of take that once we get to the Qs, but here on the ES futures, S&P futures, if we do get a break above 4,500 here, that could give us a nice little trigger to the long side, which could eventually get us back up to the hourly 200 simple, which is up at about 45.25. But then above that, you got 45.50. So you got some pretty clean levels here, very easy to remember. Above 4,500, 45.25, 45.50. Now, if we do happen to see a move down below the 50 simple, yeah, that opens up the floodgates a little bit to about 44.33, give or take, 44.30. And then, of course, you don't really have much support until, back against, 4,400, 43.75. So you really don't want to see the S&Ps close below that daily 50. If we translate that into the SPY here, you can see that, the market has done a pretty good job at holding 444. Now, this number came up a lot last week from multiple guys, 444, keep your eye on that, 444, keep an eye on that. And so far, for sure, we have held on to that. We're still trading, just like on the futures, we are still trading above the 50 simple moving average, and we're holding on to that 444 support level. Now, why 444? Well, simply put, this was our key level of resistance a few months ago, and we actually gapped above it and started to move higher. And this is actually when some of that divergence was coming into play on the hourly, where we were making higher highs, but the indicator was, making higher lows. So we definitely still have that divergence in play. So for now, 444 is the key spot to hold. Now, if we happen to lose 444 and the daily 50 simple moving average, it definitely opens up the gate for a move back down to possibly 438, maybe even lower. And, if we take a look, well, I don't want to get there for now. What I do want to, kind of mention here is that with the S&Ps, there is an interesting positive divergence here. If I can pull up my 15-minute chart here. So this is something that the bulls have in their bag that I'm wanting to pay attention to. It's this interesting dynamic where the path of least resistance does seem to be lower, but at the same time, the bulls might have something in their back pockets that could spur up some buying pressure, and that is with the 15-minute chart. Now, I know it's a lower time frame, and it is what it is, but that could gather things up and give us a shift in momentum to the upside. And you got a little bit of this, falling wedge kind of pattern, and that pattern can be bullish. And on top of that, you have this positive divergence here where on the 15-minute chart, you have a series of lower lows, but on the oscillator here, you have a series of higher lows. So we definitely want to pay attention to that. That could give the bulls a chance. I'm not getting my hopes up necessarily for the long side. And in fact, if we do get a pop to the upside, it could very well just be, a pop to where we can get a better entry into some short positions because we've been moving lower on higher volume, and we'll have to see where things go. So with that being said, keep an eye on those smaller time frames. I know right now it's not a really enjoyable market if you are a swing trader. Right now it is definitely, there's a lot of intraday volatility. So if you are a day trader or a day scalper, this is definitely your market to be in. No doubt about that. We get these aggressive moves to the upside. We get these aggressive moves to the downside. There's just a lot of back and forth here, and it's kind of a little bit harder to be a premium seller with these movements because that volatility can creep in and just eat you alive. Or if you're, if you are long delta, it can be a little bit crazy, especially if you are in shorter dated options. So if you are in options trades, maybe definitely be sure to make sure you have some time until we get a better understanding of the direction that this market really wants to go in. Same here, Zonk. I enjoy swinging, and don't get me wrong, there's still some setups out there that look really juicy that you can take swings on. Now, if I wouldn't go full heavy on those swing positions, so like if your normal size is 10 lots or X amount of shares, maybe look into reducing that exposure just because of the crazy volatility and the fact that the NASDAQ has been getting hit really hard over the past few days. And if the NASDAQ continues to get hit pretty hard, then that could definitely drag down the rest of the market. But there is that slight glimmer of hope that the S&Ps continue to hold on to this 444 level where prior resistance is now acting as support, and support is support until it isn't. So until we break down completely, that is a pretty interesting spot to hold on to. But if we start to break down, yeah, careful on your long-sided names here. Now, moving on, So moving on to the NASDAQ here, we want to take a look at the Qs, of course. Now, the Qs have been absolutely beat up. Apple has fallen off the bandwagon since their earnings report. Same thing with Microsoft. Tech is just getting beat up, and last week was the first time that we saw a daily close below the daily 50 simple moving average. Now, that doesn't, every time, we get a close below the daily 50, it's really nothing good can really come of it. We always say, let's see. I guess right now, even though we've got the close below the daily 50, you can take a look at Apple, you can take a look at Microsoft, and you can look at any other tech name out there that has closed below the daily 50, and it really is just a chart that is up to no good at that point in time. Investors are a little bit more skeptical, especially on the shorter term time frame, and with all these massive run-ups to the upside, maybe the market has gotten a little bit fang over where they've just bought so much they can't buy anymore, and they've taken profit coming off the table, especially with these earnings. We're in this interesting spot with China, with the AI chips. We don't know what's going to happen next with those, with Biden and Xi Jinping. So there's a lot of observations on that. We're trying to curb exports to China in that regard. So there's a lot of noise here within the QQQ as we kind of fall back. And if you look at the histogram here on the weekly squeeze, you can see that we've gotten 4 bars of declining momentum. So the squeeze is definitely over as far as the weekly time frame goes. and momentum is definitely shifting here. Now, the Qs, though we did get a close below the daily 50, we are holding this 364.25 level. If we start to break down a little bit further, look out for 357.50. And then, of course, we got this bigger level here, which is the 618 retracement from the lifetime high and the swing low. So 350 is going to be your next level to watch if selling pressure definitely continues to move on. I do have a dark pool print here where someone bought or sold about 1.5 billion in QQQ here. And since then, we've really just been on this move lower. And, you know, semiconductors, they're definitely not doing you any kind of favor. Microchip stocks are just getting absolutely whacked. You know, see here, the semiconductors, they did close below the daily 50. And like I said, nothing good can really happen below the daily 50. And as you can see, we're just kind of in a free fall here, it seems. We do have a crossover on the oscillator. We don't have a sell signal, which is interesting just yet. But if you take a look at your semis, they are getting hit a little bit harder, mainly with AMD, which AMD, 1.5 billion. That was you, Shroomy? Dang it, man. Give me $1. No. 107 here on AMD is the level to watch, and this is going to be a watch list item for us this week. We could easily bounce here at this support level because support is support until it isn't. You had a little bit of dip below here, but, you know, for now, you're still looking like you got a daily squeeze here. We got a cross down on the oscillator, and we also have some negative thrust signals here on the thrust indicator that I have. And we could see some move lower, possibly even a retest of the 100. That would give us a close to a retest of that year-to-date volume-weighted average price. So I definitely want to pay attention to AMD if she does want to move lower. And then, of course, if you look at NVIDIA too, NVIDIA is just having a tough go here. We've had several periods of consolidation, and we even took this as a nice little swing trade and day trade on NVIDIA last week, and you've had this nice consolidation. NVIDIA likes to consolidate and then break up or down on it. And last week we caught the move to the downside. You do have some support around here around 400. And then, of course, you have gap support down at about 375, which I do want to mark that level for sure. So 375, that is going to be your earnings gap support. You have earnings coming up, not this week, but next week is NVIDIA earnings. So keep an eye on those premiums for sure if you're trying to play NVIDIA. They're going to start to get a little bit more pricey as we get closer and closer to that earnings data. But yeah, if I were to pick one to short here, it'd probably definitely be AMD if I had my pick. Now, as far as the other FANG names, I would probably, if I were to pick a FANG name, it would probably be AMD. I wouldn't short Apple here just because Apple's been so darn beat up since earnings. But yeah, you possibly got a nice little bear flag breakdown here. But for now, it's holding 177.35. You do have a level here at about 170 that we could easily revisit. There's a small gap to fill at about 176, 175 zone. But, you know, Apple's already kind of been taking the punch to the head, so I don't really want to short Apple. Microsoft has been beat up too. One that does look good to possibly short if the NASDAQ wants to continue to slip and slide. Is Meta. Meta looks like it wants to continue and maybe even come down here to the daily 50 simple moving average, which is still down here at about that 293, 294 area. So keep an eye on Meta. Definitely keep an eye on Netflix as far as the communication sector goes as well. Netflix had this nasty breakdown on Friday. And you can see here on the chart, after we break that down, we could easily see some follow through all the way down to about 414, maybe even 410, and retest that support zone. So definitely keep your eye on Netflix. But in regards to the NASDAQ, to the QQQs, yeah, we've had this daily close below the 50. We've already seen examples across the board here. What happens when names lose their 50 simple moving average? And the answer to that is not good. So, you know, the sellers are definitely in charge at the moment. Volatility is still the nature of the beast. That doesn't mean you can't go long. Just if you want to go long, less exposure, Trade intraday. If you're, if you're not a day trader, maybe now's the time to brush up. We talked about this last week, when we started to mention, hey, this is not a swing traders market, this is a day traders market. Now's the time to kind of brush up on those day trades if you want to, or if you can. I know a lot of us, work during the day and, you rely on swing trades and all that. So now's the time to just kind of be sitting and being patient, sit on your hands, maybe look for stuff that are on a discount buy and have a list of items or a list of names that you want to go out there and go buy. One of the key things that I do want to mention is, and we don't look at the RSP a whole lot. This is I don't have a thing here for it, but one thing on the RSP is this is the equal weighted S&P 500. Not a whole lot goes into this. This is just everybody thrown in the same basket. It doesn't matter if you're Apple or Ford, DraftKings, whatever. You're all in here. You're all the same. This is where you can see that broader market being a little weak, and you definitely don't want to see this break down terribly a whole lot. So if the RSP can hold up, maybe some of the growth names pick back up, or value kind of lifts us up. Which, speaking of value, if you look at value ETF Vanguard VTV, this is actually holding up pretty well. So check out some value names. It kind of looks like the Dow. We'll go over to the Dow in general because, it looks just like the Dow. Dow's actually holding up pretty well. I know there's only 30 names here, but you got some interesting stuff here. Certainly better than the S&P and definitely better than the NASDAQ. It's holding above its daily 21 EMA, and it's just kind of trading in a box. Mostly, the heaviest weighted name in here is UNH. You have sectors like healthcare, the financials, and you have energy also having an impact within the Dow, most notably financials and healthcare. And if we take a look at UNH, this is definitely probably one of my favorite names right now as far as the setups go. You got a nice tight Darvas box between 515 and about 500. So you got a nice 15-point range here, and it's going to break out. It just depends when. You do have a nice little daily squeeze here with some upward thrust also. So I am looking for this breakout above 414.66, 415 level on good volume. I want to see this volume nodes start to pick up here. We've seen a decent little move off of earnings on high volume, and since then we've just been in this tight consolidation period on low volume, which is something that you want to see here in regards to this consolidation period with that volume. So all we got to do is just be patient for this to break out. I probably could have nibbled on a little bit on Friday, but I definitely wanted to just wait and get the weekend over with and see how the week starts out. But UNH is definitely on my watch list going into the week ahead, maybe even longer. So you can either do that by either picking up maybe some options, doing some spreads. You probably sell some put credit spreads, or you can just simply grab some shares here on UNH. All those options are viable depending on your risk tolerance and how much you want to put out there and what's best for your account. So UNH, yeah, this looks like a pretty good setup as well. Can you cover Apple, Baba, and PayPal? Yeah, we'll definitely take a look at those guys. Let's see. All right, so as far as the Dow goes, it looks great, especially when you consider names like UNH. Walmart is at lifetime highs here with earnings coming up, so we will pay attention to that. And then, just in general, if you want to look at the XLV sector, and take the bread basket, I mean, this looks pretty constructive here. You got nice structure here with the moving averages. You got a nice little resistance here you can work with at 137. Once we do break above 137, that does open the gates up here to 142. And you got some pretty good names here. You got Johnny John, that's perking up off of its earnings. The chart's a little bit sloppy, but that's okay. You still got good volume coming in here. Just need to see a move back above 176 and you're good to go. Another name that's looking pretty impressive is AbbVie. AbbVie has had a pretty decent move these last few days off of a squeeze. We've had a crossover on the oscillator with some upward thrust signals. Just if we get above 154, you get a nice little gap fill towards 161. So I know some of these names are kind of boring when you compare that to names like Tesla or Nvidia and all that. But these are the setups that are working right now, not necessarily tech. Tech is trash, and you can't really buy tech when you have treasury yields that are absolutely trending higher. And this is absolutely the biggest red flag out there right now. And I posted this earlier. You get free money here on Treasury T-bills. You can go in treasurydirect.gov, get yourself some 4-week T-bills, and they're paying out 5.3%. And yeah, it's just easy free money. It's just kind of crazy how there's not a lot of people talking about this, where you can go in, buy you a bunch of 4-week T-bills, and it only has to be a minimum of $100, so you're not talking about a whole lot here if you want to get started in treasury bills. But the 4-week, the 8-week, they're all offering 5.3%. I don't know what your savings yields are right now, but 5.3% and 4-week return, that's kind of silly to me if you're not taking advantage of that. So definitely go by yourself. Maybe look and see if you can get yourself some treasury bills in the future. So yeah, 4-week, 8 weeks, 5.3%, 17-week, 5.3%. Now, as long as you don't need that money right away, you can just, if you just have money sitting around, just buy some treasury bills and be happy with when the returns hit your account. Yeah, it's pretty crazy how silly that is. It's guaranteed free money, basically. You just lend the government your money, and 4 weeks later, they'll pay you interest on it. So there you go. So yeah, as far as TNX goes, yeah, it's hard to be long tech when interest rates are 4.1, 4.2%. So as long as TNX is above 41, it's super hard to be long tech, and that includes Apple, that includes PayPal, tech in general. It's hard to be a buyer of tech right now when treasury yields are this elevated and looking to trend higher. So that is the danger zone. So there could be a short-term pullback, and we could hold 41 and then push higher. There's a lot of interesting questions here as far as the TNX goes. But if you're looking at this chart, this is not what you want to see if you are a bull, especially if you are a tech bull. And you can also look at the dollar, the Dixie, DXY. I need to put a dollar sign in front of that. DXY, the US dollar. And as you can see, even tonight, it's moving higher. And one thing you don't want to see here on the dollar is the dollar get and close above that daily 200 simple moving average. This is definitely a headwind for the market. It's just bad news right here. So as long as the dollar continues to move higher, stocks are going to have a hard time moving higher. And in regards to, we just talked about tech. Yeah, that's not going to be good for tech in general. So if you look at Apple, Hitesh, yeah, it's not looking pretty here. You're holding 177.35. It's beat up off of earnings, so it's hard to kind of short right now. But it's also at the same time, it's kind of in la-la land. I don't really want to short it when it's in the hole. That's how you get hurt. You kind of want to wait for this thing to have a decent bounce at some point, maybe an oversold rally. If it can, you do have dividend paying out tomorrow, it looks like, so that's nice. If you do get a bounce here, sure, it could be, if we even come up to the daily 21, that could be a shortable spot. But I'd still find it hard to short Apple in general. But as far as this chart, this thing is beat up. It's closed below the daily 50 on high volume here, and you're consolidating on lighter volume. So this thing might actually have some legs to go lower. But if I'm wanting to get in a short, I would like to see a bounce maybe back up towards 180, 183 zone, and then go from there. But for now, yeah, this thing's beat up. It looks like a bear flag on the hourly. You got this nice little, you might have a little wedge here. You got a nice little squeeze here on the hourly, which is trying to pick a direction here. It looks like the oscillator is pretty bad, and the thrust is very, very bearish. And this is not what you want to see in a strong name or a strong market, high market cap name such as Apple. So Apple looks pretty darn rough there. So if we take a look at BABA, yeah, we'll take a look at BABA. BABA's in no man's land. China, of course, has been pretty interesting. They seem to be pumping their stocks pretty decently almost every other week, it seems. But as far as BABA goes, I like it. I definitely like it above 104. I think someone asked me probably about 2 weeks ago, and it was kind of the same spot here. Where I was like, I don't like it. And then we had a nice little run up and then came back in. And until we break out of this range between 104 and about 79.50, there's not much you can really do with it. Sure, this is getting a little bit of a decent squeeze. This is still fine on the hourly. Yeah, it's just hard to take a position here in BABA. Of course, if you're long BABA, you can have some stops down here at 79.50, especially if you are long-term BABA. This looks pretty decent to me. But for now, if you're trying to look for a position, you're in La La Land. I can't really recommend anything until you get a breakout above 104. And you've had some decent volume here on earnings. We needed to kind of digest that and go from there. It's stable. It's just not going anywhere. It's not moving higher, it's not moving lower, but it's got the opportunity to push higher here. So I'm a fan of it if it gets above 103.60, that 104 zone. So if we get above that, that does introduce maybe a move here. Let's see, to probably about 106, maybe even 110 to the upside. And you can probably draw some fibs here and see what your overall targets would be. Actually, let me go ahead and do that because I want to do a measured move here. Yeah, that puts you back up here if you do get this breakout. And all that is doing here is measuring the high and the low and calculating the difference and throwing it up here. So that would be your ultimate target if you break out of this box. It's a nice little Darvis box between 104 and 79.50, give or take. And that'll be your upside target. Now, you would definitely want some minor targets up here too, if you so desire. But until it breaks out, I can't really buy it here. You're just going to chop fest, just back and forth for now. So for now, BABA, maybe just wait and see. Have an alert set at about 104, 105, and wait for it to go off. And if it goes off, hooray, there you go. PayPal, yeah, we'll take a look at PayPal too. PayPal's busted. It's kind of gross. Now you had in this nice little trend line here to the upside, got above 69. You filled this other earnings gap before earnings, and now you've just absolutely collapsed. Yeah, this looks kind of gross. Now you could play, you could say, well, is this a wedge here? Yeah, maybe, but until it breaks above, I mean, you can't really confirm that that's a wedge just yet. So maybe have an alert at the high of the low bar there at about 62 and play off of that. But if you're looking to go short, this thing looks like it wants to retest 58. I got bad structure here, 21 crossing below the 50. You're still below the daily 200, so you're still below the bullish bearish hemisphere. And yeah, you're coming down on pretty decent volume off of earnings. That is also a breakaway gap to the downside. And yeah, this thing does not look too good at all as far as PayPal is concerned. So if anything, PayPal looks like a short. Yeah, I probably wouldn't touch PayPal at all. It's probably not on my radar for the time being, unless it just breaks down further. And if we get a bounce, that'd be great because we can short it then. But that looks kind of nasty. If you ask me, if you are short PayPal, congrats. That looks pretty bad. You even got a crossover on the oscillator. You got some bearish thrust here. The hourly looks pretty bad also. I don't really have any positive things to say about PayPal. Let's see here. Okay, so we left off with the Dow. We talked about the dollar and the 10-year yields. One of the spotlights is definitely crude oil. Yeah, well, if you want to translate crude oil to what you're paying at the gas tank, you're going to want to look at RBOB, which is RB. Everybody just calls it RBOB. RBOB sits at $2.94 per gallon, plus all your state taxes and fees and all that kind of stuff. So like I said, I paid like $3.50. I can't remember. It was between $3.40 and $3.60 at the gas tank this weekend. So yeah, 294. It's elevated thanks to crude oil, and energy prices continue to trot higher. We had this nice break above the daily 200. We got above, let's see, this level here. I don't know where my drawings went, but there you go. Let me see. We should have had a level about 83.50 here. We got a break above. Trading in this zone here. Nice trend. And yeah, crude oil continues to be pretty resilient. And the energy sector in general, pretty impressive. This is one of the brighter spotlights in the market out there as far as sectors go. So if you're looking at sectors, your first sector is going to be energy, financials, and healthcare. Those are going to be your main players, maybe even the XLP, because you do have a decent setup here with Procter & Gamble. That will be on watch as well this week. You're looking for a move above 158. So XLP, not too bad consumer staples there, but XLE and the XLF looks pretty good. XLF did move slightly lower here, kind of retesting this breakout level at 34.76. I still like this sector in general. The momentum is still intact. You got a daily squeeze forming here. We've seen some pretty good moves off of JP Morgan, and definitely one of my favorite names in the financial sector is going to be Berkshire Hathaway. This has probably been one of my favorite names this year. It's trending nicely. You've had earnings. They're sitting on a lot of cash, just a lot of good stuff here to talk about as far as Berkshire in general. And of course, you got, Buffett there. So, what else is there? But you got a strong trend here. The oscillator is very bullish. You've had nothing but buy signals since April, and what's there to complain about? Berkshire B, this is also a value name and is part of that VTV Vanguard Value ETF. It looks fantastic. So definitely check out Berkshire as a dip buy opportunity within the next coming sessions or so. So I like Berkshire. Financials look good. Other than that, let's take a look at a few things. I did briefly mention Procter & Gamble here. You do have a nice little tight range here. Just needs to break above 158, 159. We did play this on the breakout of 153 and made good on that trade. So maybe we're getting ready for round two. I might be looking at picking some up next week at the beginning of the week. I definitely want to keep my eye on United Healthcare for a break above 515 on this range here. This looks pretty juicy. We discussed this earlier. If you're on YouTube, you can just rewind it and re-listen to that. Let's see. LLY, another healthcare name. Breakaway gap on massive volume. This is one of those relative strength names out there when the market is going to poop in tech land. You got this nice resilient name here in Eli Lilly, and I know we've had a few guys play this name. We got a lot of dads in here who own some shares in LLY, so congrats to y'all. Yeah, this thing is strong. Breakaway gap on earnings. There's nothing negative to say about this at all. So keep your eye on LLY, maybe for an entry here if you're not in it. Another interesting one. Let's see. We talked about Johnson & Johnson. SIBO. Yeah, SIBO. This is an all-time high name here that we can probably keep an eye. It's a little bit hard to chase here at 150, so we will need a slight pullback, but you've had this nice breakaway move off of earnings back above the highs here at 143.83. So if we do get a pullback towards 144, that could be a nice entry, of course. And then you got Hilton Worldwide. This one's looking pretty good to me also. I think Marriott International's at all-time highs. Very strong there. Definitely difficult to buy when it's so extended away from the main moving averages. So we will want to wait for a pullback. And of course, the names that I'm looking at on possibly getting short is tech. XLK, if you look at the sector in general, tech, XLK sector, heavy Apple, heavy Microsoft. This looks like trash. You got a breakdown below the daily 50. You're getting that crossover of the 21 EMA below the 50. That's bearish. The oscillator has crossed below, and you also have negative thrust here. Those are all the ingredients of run away. And yeah, there's nothing really good to say. Tesla, uh, a little resilient here, a little stubborn, but it is breaking down kind of fashionably. You do have a gap fill that is right there at 235. But as far as Tesla goes, it's hard to be a bull when you're below the daily 50, and you're going to see this across the board. Now, if we do get a push back higher above 242, 243, yeah, you could see a move back up towards 250. So I definitely want to look at, if things do want to bounce, we're going to be bouncing straight up into resistance. But if that 15-minute divergent plays out, UK, you're kind of relay me back into what I'm going for here. If the SPX can hold on to 4434, then we could see, if we just hold on to the daily 50 in general, then we could get a move back up to pretty much about 4,500 on the SPX. And you got that divergence here in play too on the SPX on the 15-minute chart that we looked at earlier with the SPY. If you play the SPX, if you are a bull, you want to see this play out where you have a series of lower lows, and then the momentum is pushing higher lows. So that is a nice positive divergence. But the thing here with the positive divergence is you really need to work out, because if it pops like it did the other day where we had this aggressive move to the upside and failed miserably, you're going to see a much more aggressive move lower if that divergence does not play out and this starts to correct itself as far as that goes. So there is a potential here for sure. And because of that reason, we definitely need to view the markets in smaller time frames and stick to our guns and do the day trades or sit on your hands depending on what you're comfortable with. But without this bullish divergence on the 15-minute chart, there's not much that the bulls have left to go off of. I think there might be a positive divergence on the RSI on the hourly. If you look at the hourly time frame, check that out and let me know what you see there. See if that hourly, especially on the ES, see if that gives you any kind of clues too. That could also be a positive. Once again, RSI, that is something that we can pay attention to. I don't have it. That's not a tool that I use, but I am aware of it. And from time to time, I'll look at it. But last time I looked at it, I believe there was that divergence there on the hourly on the ES. So that could be something too. But yeah, we have to see it. We have to see this divergence really push us back up towards 45.15, maybe up here, and get us to that hourly 200, which would put you back at about 45.35. So that does make sense. That does pan out right. If we do have a push up, you want to see it act out. But then again, with everything going on, with the rates being high, with the dollar pushing up, junk bonds are trash right now. There's just more negativity than there is positivity right now within the market. So the path of least resistance does seem to be lower. There's a lot of volatility in the market. So we'll have to see. We'll take it day by day. But there are some interesting setups, especially if you are in the Dow components, if you're looking at energy, healthcare, financials. Yeah, just keep your head on a swivel here in case we do get broader weakness, or if we start to see rotation. There's definitely a lot of things that you can keep an eye on. I personally like UNH. I like the healthcare sector right now. I like the financials. So we'll see. Tech right now, as long as the TNX stays above 41, yeah, it's not good. So if we start to see the yields go lower, great. We can day trade long tech, which there you're going to have plenty of opportunities there. Google. So like I said, Google, if you're looking to short tech, I would stay away from Google and I would stay away from Amazon. These two are probably the main two. In fact, Google has a decent little setup here. Let me see. Let me draw this real quick. I know I got a lot of white lines. I'm not going to delete those. You got a little bit of wedge here, triangle, that you're trying to hang on to on Google. So if you do get a bounce, a break above Friday's high, that could easily send you back up to 131. So if we do have a nice green day, look for some strength in Google. because Google has been pretty resilient. Amazon breakaway gap on their earnings, very impressive earnings. You've been holding 136.50. This is pretty resilient too. You haven't broken down with the rest of the tech names. And let me zoom in here real quick for you. Yeah, you got a nice little trend line here, a nice little break. So if you break above Friday's high, you could easily swing all the way this and take all these guys who tried to short Amazon up here, just wipe them out completely. So there's opportunity here to the upside if we get some rotation back into tech and away from something like energy. So if we do have that happening this week, I do like Amazon and I do like Google. Apple could be an interesting one as far as a day trade goes, but Apple's kind of in la la land, so we'll see. It could have a nice short bounce, short relief here if sellers want to kind of take their profits and create more buying pressure. That could easily send things up, but I would have a target here as far as Apple goes, right up here at about 180, maybe even 183. But the damage is pretty much done here on Apple. All these pushes higher could possibly be a nice area to get short. You got the crossover, you got the cross down on the oscillator, and you have negative thrust. So a lot of negative signals here on Apple. Can I share my thoughts on ADI? Yeah. Any ticker requests, post them out before we close out. Let's see. ADI. Yeah, this one's a little bit messy too. Again, tech, software, all those guys, they're not looking too good. ADI definitely fits the bill. Now, we did have a trade here on ADI. Yeah, we still need to get above 200. I feel a little bit more comfortable here once we get above 200. Obviously, we have definitely failed on that breakout attempt here at 200, and we moved lower since then. You're holding the year-to-date VWAP, but you've closed below the daily 50, and in fact, you've come up and retested the daily 50. Let me zoom in a little bit more there. You've come up, you've retested the daily 50, you rejected it, and now you moved higher off that. Now you have a nice little spinner top here. The good thing about spinning top dojis is you can play the break of the high or the break of the low. There's a lot of agreement that, between the bulls and the bears, they don't want to take it higher, they don't want to take it lower, they want to stay right here. They feel nice and comfortable. Nice little battle going on. But if you break the high, sure, you can take this back to the daily 50. But if you start to lose that low, then down you go to possibly the daily 200, which is down here at about 178.50. You do have earnings coming up, not this week, but the next week, so you definitely want to pay attention to that. But I also want to point out that on the oscillator, you did get the cross down. You have negative thrust here. So yet again, as far as ADI goes and tech in general, you looking a little sus, as they say in Streamland. I guess they still say that. I guess that's what the teenagers are saying nowadays. You're sus. But yeah, I wouldn't trust ADI here, but you could day trade off of that spinner. That's a good little candle to day trade off of. But yeah, if you're looking for a long, I feel much more comfortable if it gets a breakout above 200, which means you're going to have to be very patient to see if it gets back up to that level. It's had a good run up since the lows down here at about 130. You hit 200. Now, last time it came down and touched the daily 200, you had a decent move back to the upside. So look to see if that daily 200 holds as dynamic support. You can see last time here, when we broke down the daily 200, it got really nasty here on a historical perspective. You came back up to it, rejected, and then gapped above it on this earnings date. And this is when you had that nice move higher. And then here you came back, you retested the daily 200 here, moved higher. Now, can that happen again? We'll have to see. So look at that move towards the daily 200 to see if you can finally gather up support off of, or with earnings coming up, keep that in mind, to move towards 200. Once again, I like it better above 200. That would be a lifetime high there on ADI. So yeah, some interesting price action here with ADI. I definitely like to look at that 200 simple moving average and just view it as from a historical perspective. Like, okay, what happened here last time we came down to this dynamic moving average and kind of go off of that. But from what it looks like, daily 200 looks like a pretty good spot to go off of. But yeah, I don't really care for it unless it gets a break above 200. And definitely right now, if you're a bear, you're kind of happy because you got that nice little breakdown. But just be mindful. Coke, you're just kidding. We can look at Coke. I mean, it's not really doing anything. It's stuck. It's doing nothing. It's a nice name to do the wheel. I think a few of y'all do the wheel challenge. SoFi. Yeah, SoFi. Hey, they had a nice little move higher off of earnings, but you gave that all away. And now you're holding 850, which 850 was a nice little breakout level. I can't zoom out. Let me change my time frame here. Let me go to a 2-year. All right, so 850. Yeah, that's what I wanted. And let's go back. No. All right. There we go. All right. Sorry, I got a bunch of levels here. All right, so 850. That's what a nice little breakout level was here on SoFi. Here you go. Resistance. Here. You kind of flirted with it a little bit here and then use that as your breakout. Now, can it hold 850 again, even though it's closed below the daily 50? We'll see. Tomorrow will be a nice little telltale there. If SoFi can get its act together and push back above 950. But for the time being, ouch. Even though you got student loans starting to be paid back soon, that's starting back up, but you're still losing money here. Minus 6 cents on the EPS, earnings per share, not good. Yeah, subsequential close below the daily 50. You got some support down here at 750, and you got the year-to-date VWAP, and you got the daily 200. So SoFi for me is just, I wouldn't touch it right here. We need to see if it can bounce and get back above the daily 50. 850 is an interesting level to work with just based upon that historical data that we just looked at, but I wouldn't be going too heavy, maybe just a little bit of a nibble, and then if it breaks below 850, you get out. That's the good part of having a clean level there. If you're trying to do options on this thing, go further dated, get something in the money, 70 delta, and do it that way. But looking at this chart, it's a little ugly. To me, and if I can't really tell what's going on real quick, then yeah, I'll probably stay away from it. There's definitely a lot better things out there than SoFi or Sophie, however you pronounce it. Yeah, 850 is an interesting spot, but you're below the daily 50. This is still serviceable though. The oscillator's still fine. You don't have the crossover yet, but you do have negative thrust signals here. And in fact, another thing that we see here on the hourly on the right side of the chart, here's your high, here's your higher high, but look at the oscillator. It is doing a negative divergence playing out where you have a high and a lower high with that negative thrust. So for me, SoFi is definitely a no touch just based upon that divergence and based upon this daily chart. It's a little too sloppy for my taste. All right. Any other questions, ticker requests? Feel free to shout them out before we end the session. We're coming up on 10 o'clock. I try to be done by about an hour, but we've got a few times where we've gone over an hour, which was fun, no doubt. Let's see. As far as everything else goes, if we look at the seasonality chart here of the SPX, and this is looking at months where the SPX closed higher than it opened from 2015 to 2023. We can see here that August and September are typically weaker months with the market. And, you know, we're right here in the middle of August now. We got September coming up, and then things don't ramp up until, you know, the end of the year. So from a seasonality standpoint, this is generally your weaker times to kind of be trying to do something here. So definitely keep that in mind as you kind of digest all of this. Tybalt wants to look at Disney. Yeah, poor Disney. It just keeps getting sent to the slaughterhouse. It's just up to no good at all. You had a nice little move higher off of earnings, and I was thinking like, okay, now the bottom could still very well be in. 85 is a good clean level to work with here, but with that move, it's just you're going to be frustrated. It's a frustrating trade. Yes, you have a nice low here at 85.16. If you are a value buyer or if you're trying to buy shares, this is an interesting opportunity. I had the same kind of feeling about when we were at 87 and then we broke down a little bit and hit 85. But this is an interesting spot to be. But Disney, they're undergoing a lot of restructuring costs. Of course, you got the whole going back and forth with the state of Florida and the whole Go Woke thing, which eventually all that will be noise. It's just a matter of, can Disney withstand all the heat in the kitchen and move away from it? You can look into their internals and see, they're doing that whole thing with ESPN now. ESPN buying out Penn. Now they're trying to do, or sold Penn back to Dave Portnoy. They're getting into sports gambling on ESPN, which hopefully they'll legalize in Georgia soon, because that'd be nice. Don't tell my wife. Disney, yeah, if we can hold above 85, I think you're in the clear. But if you start to even remotely come down here below 85, 84, things can get a little bit nasty, because then you're starting to look at 52-week lows again. But yeah, earnings were, earnings. I'll have to go back and look at the report because I can't remember off the top of my head. I do know that they have some restructuring costs and all that kind of good stuff. My brother, I don't know, like if y'all have personal experiences and all that. My brother and his family, they love to go to Disney. They go all the time. Of course, they have daughters that they take. They just have a good time, and I've never heard a bad thing from it when they go. So from that, personal touch, do I think 85 is fine to work with as like a tradable low? Sure. Am I buying options? Maybe leaps, just because it's so beat up. And if Disney wants to maybe even play off this weekly wedge, that's definitely an idea. Now that I'm looking at it, you have this nice little wedge here, but of course it needs to break out above 90, what is that, 96.70. So you got a little bit of ways for it to prove itself and break higher. And then of course we would have to move that measured move and see where that would take us, probably back up here to this weekly 200 at about 132. That could be pretty hot. But yeah, 85, that's a clear good spot to kind of work with to start and have a place where if you want a dollar cost average or have your hard stop at 85, 84 zone. That's the good thing that I like about Disney. You have a nice tradable level to work with and just have it for the long haul. Now, I will say that, one thing that the professor has been preaching in the mornings about Disney is that Disney was used to be a dividend name, and they got rid of the dividend, if I'm not mistaken, and Who Wants to Own It? I'm pretty sure that's the name he was talking about. I can't remember off the top of my head. But yeah, I don't have Disney in my long term, to be honest with you. So just full disclosure there. But yeah, Disney, at least you have a tradable bottom. If you want to do options, try some leaps. Maybe even do some dollar cost averaging down here if you want to, if you believe it in long term. Yeah, I think there's some interesting opportunity here. But definitely do your due diligence on that, on the fundamentals aspect. From a technical standpoint, I'd probably wait and see with a hard stop at 85. So if I bought like 100 shares or however many I would want to buy, I'd have a hard stop at 85. Just me in general. And then, of course, if it starts to move higher, then maybe I'll creep in, add some more, see if it gets above this gap fill level here at about 90. Was that 95? Yeah, that looks good. Add some more at 95, see if we can break out and move towards 100. Yeah, that'd be a good little trade, wouldn't it? You're welcome. Yeah, no, it's a little complex situation here with Disney. You got a lot of stuff going on, both price action wise and as far as the fundamentals and the whole go woke, go broke situation. So it is what it is. But yeah, if y'all have any feelings about Disney, let me know. Let me know what you think too. All right. As far as everything else goes, let's take a look at our futures. Now, something has happened. So futures have sold off. We're back at to where we, yeah, we're back to flat on the ES. NASDAQ down, but as you can see, we're down below VWAP. This could be, I don't think, yeah, China, let's see what's going on. Let's see. Yeah, Hang Seng's down 2%. Ew. Let's see. All right, so we'll keep an eye on Asia markets as they open. Europe doesn't open until 3 a.m. and then they close at 11:30 a.m. Eastern time. So open at 3:30. We want to keep an eye on Europe. If you're a light night owl and want to watch those. But for now, it's just a bunch of price movement here. This could all change by morning. We could be a lot further down. We could be a lot further up. Who knows? But for now, you're lower and you're below VWAP on futures. But all right, any questions, comments, concerns? Just want to go back over and retouch on my ES levels here, or the S&Ps. You can convert them to however you need to convert them if you trade SPX or the SPY. Get above 4,500. That will be your first bullish start to go long, and just play the bounce off the daily 50. If we start to lose the daily 50, look out below 44.33. That'll be the next key spot. Yeah, bears roar. They're here. Say hello. Blink, BLNK. Ugh. BLNK. Man, I haven't looked at this name in a hot minute. What on earth do you want to know about Blink? I can blink and tell you not to trade it. I'll give you a hard time about this one, Johns. A's trades both, but he likes SPX. XPX, you get some juicy premiums. I trade the SPX time to time. I like credit spreads on the SPX or butterflies on the SPX. But either or, yeah, the SPX, you get some solid gains, but, you know, got to be careful with that too. Depending on your account size and risk, yeah, you got to get some level 3, you got to get some good stuff there for your account. All right, Blink charging, penny name. You are holding, at least you're holding above $5, but you had a high of 64.50. You're down at $5. Imagine being the guy who bought at 60. No, thank you. I don't have any reversal signals here. Just straight up looking at the charts. Your oscillator's still in bear land. You don't have a new signal here on the thrust. So if I zoom out, this thing has been in sell signals or sell cycle since September of 2022, and we have not reversed that yet. So until I get an up signal, I don't really have anything for you here on Blink. There's better things out there than playing the stuff, you know, man who picks bottom has stinky finger, as Confucius says. Yeah, this looks gross. Johns, I don't know what you're trying to do here, but I'd be careful. Yeah, if you're holding above 5, maybe you got a tradable bottom here, but I mean, you know, every time you think you have a tradable bottom, you just move lower. I mean, where was this a tradable bottom you're trying to form? Nope, you moved lower. Tradable bottom? Nope, you moved lower. Tradable bottom? Nope, you moved lower. Oh, you're just selling calls? Okay, well, sell them to the pigs, you know. Sell them to the pigs. Maybe have stops here at 7.25. Definitely above 8 for sure. Get that premium. That's the cool thing about, you know, selling premium, especially on trash names like this. Poor guys. Stealing their money, John. I'm just kidding. For everybody, there has to be a seller. It's a zero-sum game out there. And if you're definitely learn option selling. Oh, speaking of this, let me say this before I forget. I don't know if I'm supposed to announce this or not. I don't know if Lear Dog's out there or not. But we are going to be doing a options stuff. So tell your friends. We'll post this on Facebook, I guess, once we're official with it. I looked at the dates. I wanted the 23rd or the following week. And if that's the case, we'll be starting that. It'll be free. It'll be open up to everybody. Yeah, we're doing options education, free options education for everybody, for the Discord and for people on social media that we want to do. And we're going to start with the basics, and we're going to work our way up to the complicated stuff. And once we get all the way to the complicated stuff, we'll start it over and keep the cycle going. So that way we can, continue to improve on it, add in material as we need to, and also teach people options the right way. I know there's a lot of content out there, but there's not Stock Dad's content out there, so there's a void for us to take care of. So we'll be starting out with the basics, from the Greeks to the wheel to credit spreads to butterflies, you name it. We'll get as complicated as we can get, before your head explodes. But it'll provide a nice foundation for everybody, not just in here, but for out there in the world. And that way we can all learn and grow together. So it's kind of exciting stuff. So be on the lookout for announcements on that, and we'll get links and all that stuff provided so you can share that out and maybe get people to sign up using your WAP referral and get you some referrals too with it, because that'd be cool. Of course, my referral is going to be out there too, so you got to compete with me. All right, that's going to be it for me, guys. I appreciate y'all. I know it's Sunday evening. There's a lot of things that you could be doing, and you came out and hung out with me, so I definitely appreciate that. Have a good evening. Get some good rest. We got a fun week ahead of us. I'll post my notes here in a minute, and I'll post my watch list for tomorrow. And yeah, we'll see you guys in the morning. And if you're on social media, I'll be live on Wednesday for you guys, so be on the lookout for that. And I appreciate y'all so much. Have a good evening. Take care. See you in the morning. Bye, guys.